Hi, this is Frank Macri with Professional Realty Services here today. I'm here with Candice Gerlach, CPA, and we're here to talk to you about 1031 exchanges with your rental income property. Candice, what's your take on this, and what do you see when people come to you having a rental property that has appreciated, what have you, and they want to make a move?
So I often find that people are really surprised to find out how much tax can occur when selling an investment property. Not only are you looking at capital gains, but there could be some ordinary income taxes as well through depreciation recapture. I did have a client one time who had sold an investment property, was completely unaware of the amount of tax that was going to be required, and completely unaware of any other options that could have been used to mitigate those taxes, and was just very shocked to find out that they were going to pay about 40% of their cash that they had received from the property back to the government.
And they probably already spent it.
Yes, they already had plans for their money, and that really caused some problems. Besides the fact that it's not fun to write checks that large. I usually tell people it's a good idea. I tell my clients up front it's a good idea to talk to people. They don't need to remember the details, but wanting to get rid of an investment property, that's the point to have a conversation and talk to a real estate professional about the different options that are available, and talk to a tax professional to discuss how much potential taxes there would be. You can also have a tax professional run various scenarios so that you can pick the one that suits you the best. So from your standpoint, what do you see, Frank?
What you're saying is definitely do this up front.
Yes.
Don't shoot from the hip.
Yeah.
What I see, it depends on the type of person. You have the people that just want to get rid of the property and maybe they'll just take their medicine, or the ones that do want to do what I call a standard 1031 exchange. They're going to get rid of this old property and come in with something new, or something that's little known, in my opinion. I've been in this business a long time, and I didn't hear about this until just a few years ago. But a vehicle called the Delaware Statutory Trust, DST for short, and that's I think it's a beautiful vehicle for people who don't want to pay the capital gains. They want to have it deferred. They still like owning income property, but they're tired of being a landlord, maintenance, management, all that stuff. That I think that's a wonderful vehicle for them. Could you go into a little more detail about what a DST is?
Yes. So a DST is a pool of investment, real estate investment.
Like a fractional ownership?
Yes. Yes. And, I just think, so with that being a fractional ownership, I do find sometimes that there are concerns about money being locked up. Do you know if there's different time frames, or could somebody maybe do a partial with their funds that they receive from a transaction if they wanted to keep some cash, but also wanted to keep the rest of their cash invested in real estate without the headache of being a property manager?
Oh yeah, you could take what's known as boot, right? And they can do what they want with that. They'll pay their taxes on that, and then you can invest the rest into the DST, and that's all tax deferred. And it gets you into properties that you couldn't individually get into, and they're pretty diverse, and as you know. But I just think for the person who wants to have an investment in real estate, but just would like to just go to their mailbox every month, get their check at the end of the year from the powers that be, just send them everything for the year, their little statement, they give it to their CPA like you, and you got everything you need to do their taxes and all that. So.
Yes, I agree. I have seen those be very useful, not just in only in the long-term investment portion of it, but also as a placeholder while trying to do a traditional 1031 exchange. I believe that in some cases it may extend the ability to identify properties. Is that the case?
I don't know that it extends it, but you never have to worry about not getting it in time. So it's a good vehicle, I believe.
Yeah.
So I think we're going to conclude at this point with that. If you would like any more information on 1031 exchanges, Delaware Statutory Trust, please contact us at the information below. Thanks so much.